Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth Mackenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we might as well fess up and say you're going through a bit of a dry period at the moment for the portfolio. It's not been the greatest couple of weeks, in fact, a couple of months.
Yeah, that's right. I suppose it's a little bit like the weather up in Joburg at the moment. It's very much a drought for us at the moment in terms of our portfolio. Because when I think back on it, I think about the last 5 trades that we've done haven't really helped us much. We had that option structure for the September closeout, which didn't really end up working for us. We've had Pioneer Foods, Zeda, pairs trade, that didn't work. We were short SAB Miller just before the announcement of the deal came to fruition. That didn't work. We're in Zeda and pairs trade with Rand Merchant Bank and First Rand at the moment. Neither of those are really doing much. So it certainly is a dry period for us. But having said that, we're also not taking big losses. We've been relatively good at risk management, keeping where we have made mistakes, we've kept the losses fairly small. And overall, the portfolio is still doing well for the year to date, but definitely the last 2 months hasn't been much fun, really.
I have to say, though, it does seem as if every year you go through this, or there is always a period at which things don't work out, and then generally it comes right. But this is natural, and I suppose maybe the lesson for other traders out there is happens to everyone. And so not everything always works out all of the time. Absolutely
right. This is a real life trading show. We trade with real money, and we show it like it really is. And there's no false pretenses. So yes, we do go through tough periods as traders. All of us do from time to time. And I guess you can translate that to other professions in life as well. Sportsmen also go through bad patches. So trading is no different. We kind of going through a bit of a slump at the moment, but what do they say? Talent is permanent and form is temporary. So let's try and look at it like that.
Oh, well, if to use a cricket analogy, you're just hitting ones and twos and not boundaries at the moment. Okay, guys, so if we look at the top 40 index, I know that you want to start off the show talking about where we're at, especially in light of the fact that you have taken a structure, an options essentially structure against the top 40 rising, which it is doing at the moment.
Yes, it is. Yeah, this huge rise that we've seen on the top 40 over the last week or so, I think has caught quite a few people by surprise. We've moved up about 3,500 points, in fact nearly 4,000 points in a very short space of time since the beginning of October. And that comes on the back of quite a strong rally that we saw before that since late August. So if you look at it from the low of August, the market's rallied it's actually rallied about 7,000 points off the lows in August, which has been quite a massive rally. Now, we do have an option structure in place which runs out to December this year. It expires at the December futures closeout. You can see the payoff of that option structure on the right-hand side of the graph there. And basically what I'm wanting to illustrate here is that above 46,000 and up to 50,000, we just pay away our option premium, which is about 1,500 Rand. And then it makes money all the way down, maximum profits at 43,000 down to 41,000. The structure will only give away, or start to actually lose money below 38,000. So quite a nice structure as it is in terms of having downside protection. And what I'll most likely be looking to do with this in the weeks ahead is if we do see this market retracing a little bit, which I think is fairly possible now given that we are quite overbought and we've started to see some reversals happening, particularly in the resources space this week. If we see the market trading down towards this 46,000 area where our option structure would start to then make us money, I'm going to most likely treat this as an insurance policy and actually look to do some buying against that structure, knowing that we've got the protection to the downside. And typically, the period into the end of the year is normally a fairly bullish time of the year. So I'm going to try and structure something so that we get a little bit of the best of both worlds. If the market goes down, that option structure will make us money. If the market continues to rally, we want to be long something against that option structure. So we kind of get that V-shaped payoff where you make money irrespective of which way the market goes.
Garth, I know you're going to talk about SAB Miller in a little bit more detail later on in the show, but just how much of the bid premium is actually reflected in the top 40, would you say, at the moment? Given it is one of the largest stocks on the index.
Yes, and obviously you're referring to the SAB Miller bid now. So now that stock has rallied about 30% off its, in fact more, about 50%. No, about 35%. Give it thereabouts, okay, off of its lows before this deal with Anheuser-Busch was announced.
Yeah.
That constitutes probably between 2,000 to 2,500 points on the top 40 index, given that SAB Miller has a heavy weighting in the market. It was about a 12% weighting in the index before this deal was announced. At the current price, I would imagine it's probably sitting up 15, 16%, somewhere there. It's a very, very heavy weighting in the top 40 index. So if you were to remove that deal from the market, you probably find we would be trading down somewhere around about 44,000 on the top 40 if it weren't for the fact that we've got this big deal with SAB happening.
Yeah, so it has skewed things terribly, especially for those who weren't long of SAB Miller.
Yeah.
Garth, okay, so let's talk about some of the recent trades. And you've got an open trade, a pairs trade in RMB and FirstRand. How is this working out?
Yeah, so at the moment we're slightly underwater on it, not massively, but slightly. The chart that is on the screen there is a chart of FirstRand and Rand Merchant Bank overlaid against each other. And as you can see, the two share prices track each other very, very closely, as you would expect, because RMB is a holding company that owns shares in FirstRand. And therefore, it makes sense that those two shares should track each other very closely. Every now and again, you get a bit of a disconnect. And what you can see recently is we've got this area where I've circled it on the right-hand side of the chart there, where the price of the two stocks has deviated slightly. And typically you do get some sort of a mean reversion where they come back together again. And when those deviations happen, that's when you can generally open a pairs trade. And in this case, it's indicating that Rand Merchant Bank is expensive relative to FirstRand and certainly relative to its history. Therefore, you can do a pairs trade where you go short of Rand Merchant Bank and long of FirstRand to try and capitalize on a narrowing of that gap. Looking at it another way, this is a chart, a relative strength chart of FirstRand divided by Rand Merchant Bank. And what I also have recently been doing on this chart is showing Bollinger Bands to show how that ratio between the two stocks oscillates. And in the past, whenever you've seen the ratio between FirstRand and RMH getting to the bottom of the Bollinger Bands over there, there's been a fairly swift mean reversion in the other direction. And recently we've seen that down here. And that was what prompted us to do a pairs trade, where we went long FirstRand at 49.75 and short Rand Merchant Bank at 67 Rand. So the ratio between the two is 0.7425. We're looking for the ratio to move up to 0.78, and our stop loss on the ratio between the two is 0.72. So if we break it down into the rest of the mechanics, there you can see on the left-hand side of that graph, we've got the whole FirstRand trade, where we long 150,000 Rands worth of FirstRand, and on the right-hand side, we are short 150,000 Rand worth of Rand Merchant Bank. And there you can see the risk that we take is 4,500 Rand on this trade effectively. Now, where do we stand at the moment? Well, currently we're sitting with a loss of minus 1,630 Rand on the trade at the moment. We are losing money on the FirstRand leg of the trade. We're making a little bit on the Rand Merchant Bank leg, but not enough to offset the loss in FirstRand. And then we have had dividends being paid both by FirstRand and Rand Merchant Bank whilst we've held this trade. So we received 3,500 Rand dividend on FirstRand, and we paid away 3,446 Rand in dividends on the Rand Merchant Bank side of the trade. So those also offset each other to a certain extent. So net, we're down 1,600 Rand. It's not working for us, but it's not near our stop loss either. So we kind of just sit and wait and see if it starts to come right for us, and give it another week or two, and then we'll decide from there.
Okay, so staying in it. What about Zeda? So this also must be really frustrating, because the Zeda Pioneer Foods pairs trade didn't work out. Now you've just gone, I suppose, a naked long of Zeda. And it's kind of in the money, but not dramatically so. Yeah,
that's right. So this is the graph of Zeda at the moment. And what's interesting here are these bands of support and resistance. We've got 7 Rand there acting as a strong band of support. 8 Rand was resistance, then it became support in the middle of this year, and now it's become resistance again in the latter part of this year. And then we've got prior tops all the way up there at 9 Rand per share. Now, what we saw for last week's trade, we were looking at the fact that Zeda had reversed aggressively up off that 7 Rand level. I was also looking for the likelihood that Pioneer Foods would see a short squeeze, and that would probably drag the price of Zeda up with it. We did see Pioneer squeezing up a little bit, but not as much as I was expecting it to. Zeda did move higher, but it's kind of retraced a little bit now. So we're now sitting in a situation where we bought at R7.35 for our portfolio. It's now been trading at around R7.45 today. And I'm sort of looking at it and saying, well, what do we do? Is it time to just get out and kind of get a scratch trade almost here? Yeah. Or is this thing going to maybe make the right shoulder of an inverted head and shoulders pattern here potentially? I suppose we'll have to give it a little bit more time and see how things pan out. But certainly the trading action in Zeda over the last few days has not been has not thrilled me. In a relatively strong market, the stock's actually been fairly lackluster.
Okay, so you'll give it a little bit more time, you're saying, but
yeah.
You're not going to be overly generous.
Yeah, I think both of these trades, both that pairs trade with RMH and First Rand and this trade in Zeda, I think we give it another week or two and then let's see. But to be honest, it is very frustrating when you've got trades that are tying up capital and tying up focus and they're not really working. I always say on this show that your best trades generally work immediately or very quickly. And these trades are not doing that for us, so maybe we need to take a hint from that.
And certainly some of the other shares out there are going gangbusters, but I guess, that's also a bit of a bet, a binary bet. So, you could throw a dart and maybe pick a Lonman if you're lucky. Yeah. Garth, just on SAB Miller, so I know you want to talk a little bit about it. And I guess the question a lot of people have had sending into Stockwatch too is, why is the share not trading up at the level at which a bid has now been made and presumably, it's certainly being accepted by the SAB Miller board and proposed at £44. Why is it trading below that level? Yeah,
it comes to do with the time value of money. Let's quickly look at what the whole situation and then come into where it's trading relative to where the effective deal price would be done. That is a chart of SAB Miller over there, and you can see that huge big spike up that we saw there. That was on the 16th of September. That was the day when there was an announcement made that Anheuser-Busch was formally making a bid for SAB Miller. And you can see the share price rallied very, very aggressively there. And then we've had about 3 or 4 weeks of 3 weeks of back and forth between the boards of SAB and Anheuser-Busch. Is the deal going to happen? Isn't it? What's the price going to be? And evidently behind the scenes, quite a few prices have been proposed to the SAB board, and each time the board of SAB Miller has said no thanks, no thanks, no thanks. Now finally today we get an announcement that Anheuser-Busch is going to make a bid for £44 per share. And the SAB Miller board have said, okay, yeah, that looks good enough for us. We will accept that. So this is some of the salient points of the deal at the moment. So obviously this is a deal in principle. It needs to still be completely sort of accepted, and then we go through the various other formalities involved. The price is £44, which at today's exchange rate works out at about 902 Rand per share. Many details still to be finalized. Obviously, this is a very complicated deal, so lots and lots of things still to be finalized here. The extension for an official acceptance of this deal has been extended out to the 28th of October, which is a 2-week extension from the initial deadline. And then the benefits, well, the cost savings, some minor revenue growth benefits, and some synergies. To me, this looks like a far better deal for SAB Miller shareholders than it does for Anheuser-Busch, quite honestly.
And that's, of course, one of the risks. So there is a risk that the deal doesn't go through.
That's it.
And is that maybe being reflected in the price?
Well, this is it. So let's look back at the graph of SAB Miller now and say to ourselves, the current trading level of SAB Miller today, after this deal has been formally announced again, is around about 807 Rand per share. But as I said, the effective deal price is 902 Rand per share. So you've got this huge big gap in the price. And now a lot of people will say, well, why is there such a big gap? I've had a lot of people asking me and saying, well, surely don't we just buy SAB Miller now? The thing is that is related to time value of money. So this is a deal that's going to take a very, very long time to come to fruition and for it to be completed. And you need to take that 902 Rand per share and discount it backwards for time value of money. And that gives you a price of more or less 807 Rand where it is now. And I guess you could also say there's a little bit of an element of deal failure in that price as well, just in case it doesn't go through, although that looks unlikely at this stage.
Well, they have given a number on it. Garth, very quickly, the portfolio and then your next courses.
Yeah, so those are the positions we've got open at the moment. An option structure, we've got our pairs trade with Rand Merchant Bank and then Zeda. 345,000 Rand is what we've got in the portfolio up now, so it's up 38% for the year to date. Still pretty good, although we've been rather pedestrian the last 2 months or so.
Yeah.
And then courses quickly, my final courses for 2015, I'm going to be in Cape Town on the 7th of November and Joburg on the 14th of November. If anybody would like to attend these courses, please email me garth@traderscorner.co.za, and I'll send you all the information.
Great. Garth, we have to leave it there. Thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.